and happy Easter weekend to all. Welcome to the program that analyzes the week that was and helps position you for the week ahead. I'm Maria Bartiromo. It is a revolving door of tariff talks at the White House as President Trump speaks with Italian Prime Minister Giorgia Meloni this week, leaders from Japan, as well as a Mexican President Sheinbaum phone call, bringing more and more countries to the negotiating table. The president and his administration confident they'll reach trade deals in the near future.
We're doing very well with negotiations, I think, with all countries. We have a lot of countries that want to make a deal. Frankly, they want to make deals more than I do.
We're working on the big 15 economies first. We had a fantastic meeting with Japan yesterday. I believe there's been calls with the EU already. And then we have South Korea coming in next week. And I believe India is also talking, that's moving very quickly.
And joining me now with the very latest on the trade talks is National Economic Council Director Kevin Hassett. Kevin, it's great to have you this weekend. Welcome.
Thanks, Maria. Thanks, Maria. And I just got to say, on this Easter holiday weekend, you know, friends and family come back together, and it's just an honor to be on your show. We've been on TV together for, 25 years, back when you were on the old network, and the biggest news on TV was you're coming back here. But anyway, it's really an honor to be here with you today.
Oh, how kind of you.
Weekend.
Thank you so much. And a blessed Easter to you and your family. It is my honor to be with you and know you all of these years, Kevin. Thank you so much for your incredible work. You know, we've been talking about the tariffs and the deals that, of course, the president is working on. Would you rather see countries come to the negotiating table and say, look, I'm going to go to zero, and the U.S. is going to go to zero? Or is the negotiation more about it's got to be 10, 25, or whatever percent?
I think the president, in the end, is going to decide it. And what's going on is that people are coming to the table. There's going to be a lot of flurry of action next week because people are in town for other meetings. And I expect that there's going to be a lot of talk about everything on the table. So we have places, for example, one thing that I've heard people mention is that when we have U.S. bases, places protecting folks, that those countries tend to charge us exorbitant rents. So I'm not saying they're going to take those away, but the point is it feels like the president wants everything on the table. He wants to make great deals for Americans, and exactly where it all ends up will depend on how things are moving. But things are moving fast, and they're moving very positively. I got a readout from Jameson Greer yesterday, and it looks like we're north of 15 now of legitimate, serious offers on the table. The thing I could say you could look for is that when we think a deal's really, really close, then my expectation is the president's going to want to meet with that world leader here in the White House in order to close the deal. So if you start seeing schedules of world leader visits, then my guess is it's a good sign. Really good sign that we're close to the finish.
Okay, that's good. And, you know, you're talking about the rent for military bases. The president's also trying to get energy as part of the negotiations, right? He wants to sell energy, oil and gas from America to the Europeans.
Exactly right, and also to the Japanese. And again, oil security, energy security for Europe and Japan are really, really important issues. And so if we set up offtake agreements where we get, say, pipelines from Alaska to agree to sell all of their energy to Japan or to Europe, that it's good for us because we've got a less risky investment, and it's great for them because they're no longer susceptible to the vagaries of what happens to oil prices day in and day out.
Yeah, that's very good. All right, let me ask you about the impact on the economy. All of this nervousness and market volatility has some people questioning whether or not we are going into a real slowdown. Federal Reserve Chairman Jay Powell rocking the markets this week after signaling that the central bank is not in any hurry to cut rates, and he may keep rates unchanged, warning that tariffs will likely lead to higher inflation. Watch.
Some people believe the Fed will intervene if the stock market plummets, the so-called Fed put. Are they correct?
I'm going to say no.
President Trump reacting on Thursday. Watch this.
I don't think he's doing the job. He's too late, always too late, a little slow, and I'm not happy with him. I let him know it, and if I want him out, he'll be out of there real fast, believe me.
Wow, the Wall Street Journal reporting that Trump has been privately discussing firing Powell for months. Of course, the president told me a long time ago he's certainly not going to reappoint him. Is he going to fire him?
I think that the president's legal team will look into that again. The last time they did, they weren't sure that he did it, but then also things worked out a little bit. But the frustration that the president's voicing comes from the fact, if you go back and look at the actual actions, not the personalities at the Fed, that the minute he's elected in 2016, then Janet Yellen raises rates, even though there's no sign of inflation. And then when we have supply-side tax cuts, which should give us growth, but without inflation, then they decide, oh, it's going to cause inflation, and so they start hiking. And despite that, we still had an amazing boom, but it could have even been bigger if the Fed had understood that supply-side economics doesn't put upward pressure on prices. And then when Joe Biden had a spending spree that created all the inflation, they said it's just transitory, it's supply disruptions. And then right before the last election, they cut rates in order to potentially help the president's opponent. And so if you look at the history of Fed policy, it sure looks partisan to some. Now, I would hope that their decisions in the fullness of time, that they'll have some explanation for the data-driven reason why they did those things. But you could also understand the frustration the president has with repeated actions. And again, so not out there, browbeating Congress into not spending inflationary trillions of dollars, and now like all upset with really extreme expectations about what might happen to inflation as soon as tariffs are on the table. And as you know, I don't believe that the tariffs are going to be very inflationary at all.
Yeah, and he keeps saying that they will bring on some inflation, but at the same time, people are wondering, look, if things are going so slow and we're going to see a sharp slowdown, why aren't you cutting rates? Is it just because he doesn't want to help Trump? He doesn't want to help Trump get out of the tariff uncertainty mess.
Well, the fact is that we don't know what he would do if things were to slow down. We don't know what he would do. But I can tell you that things aren't really slowing down right now. In fact, if you look at the data, there's a massive onshoring of jobs in the U.S. Even when I talk to CEOs that are retailers, they're saying that people are buying things, not just imported things. They're buying things like crazy right now. We're looking at a very, very strong economy with declining inflation. And so I think against that backdrop, we'll see what the Fed does. But the bottom line is that the signs that the president's policies are working are really vividly in the data. And think back to 2017, 2018, when we passed the tax cuts, the sign that the president's policies were working were very vividly in the data. And the last time that happened, they thought, oh, we got to hike because this has got to cause inflation from all this growth. And we'll see what happens going forward. But one would hope that they would study the economics and Trump's positive record and take that into account.
And it, one would expect that once the deregulation really takes place and is sustained and the tax cuts are extended, that would be a positive for the economy. But it sounds to me that you're not expecting a recession this year.
No, I really am not. The first quarter's looking like it's going to be way better than people thought at the beginning of the quarter, way better than we expected because of what we inherited from Joe Biden. And it's because President Trump's policies are working faster than expected. And the way to think about it really is that what's going on is we need to onshore activity, create jobs in the U.S. And it used to be that was like a really, really slow-moving thing. But now with AI and supply chains and everything, it's a much less slow-moving thing.
Yeah, it's a great point. Kevin, it's wonderful to talk with you. Thanks so much.